Arizona homeowners are opening their mailboxes to find cancellation notices from insurance companies they've paid for decades. 15 mountain towns are losing coverage so fast that real estate agents warn some homes may soon be impossible to mortgage. The wildfire crisis isn't coming. It's already rewriting who gets to own a home in Arizona's most beautiful places. At number 15, we have Sedona, nestled among those famous red rock formations that make every postcard and Instagram feed. But that stunning natural beauty comes with a price tag insurance companies refuse to pay anymore. The town sits surrounded by dense chaparral and pinyon juniper forests that turn into tinderboxes during Arizona's dry seasons. These plants evolve to burn, and insurers know it. Every summer, the risk calculation gets worse. Insurance companies have dramatically increased premiums here, with some carriers refusing to write new policies altogether. The 2014 slide fire burned over 21,000 acres nearby. Underwriters pull up those maps every time someone applies for coverage. Homes built into hillsides with limited access routes face the highest cancellation rates. Evacuation concerns compound fire risk assessments in ways most homeowners never considered when they bought. One road in means one road out when flames approach. Properties surrounded by vegetation that seemed charming during the purchase now fail satellite imagery reviews. Companies use advanced mapping to identify every tree and shrub within 100 feet of structures. Sedona homes rarely pass these new inspections. Even residents who've cleared defensible space and installed fire-resistant roofing are getting dropped. Location risk overrides individual mitigation efforts. When insurers decide an entire area is too dangerous, personal responsibility stops mattering. Coming in at number 14 is Prescott, where explosive growth in recent decades pushed development deeper into fire-prone ponderosa pine forests. The town's elevation and vegetation create ideal conditions for catastrophic wildfires, particularly during windy spring months. The devastating Yarnell Hill fire of 2013 claimed 19 firefighters' lives just outside town. That tragedy fundamentally changed how insurers view this entire region. Every underwriter in America knows the name Yarnell and what it means for Prescott. Many longtime residents are seeing their policies non-renewed after decades with the same carrier. 40 years of premium payments and zero claims don't matter anymore. Companies are abandoning ship regardless of customer history. Newcomers struggle to find any coverage at all beyond the state's insurer of last resort. That means premiums 2 or 3 times higher than standard market rates. Some buyers are walking away from dream homes when they see insurance quotes. The real estate market in Prescott is starting to feel the squeeze as lenders require proof of insurance before closing. Cash buyers still proceed, but anyone needing a mortgage faces a crisis. Beautiful mountain properties sit unsold because financing falls through. Local agents report that carriers who built their business in Prescott are now refusing to write policies in the same neighborhoods they covered for 50 years. The math changed, and loyalty evaporated overnight. At number 13 is Peson, surrounded by the Tonto National Forest, in what experts call the classic wildland-urban interface dilemma. The town's pine-covered hillsides and canyon areas create numerous fire corridors that keep insurers up at night. Homes are often separated by forest rather than defensible space. Neighbors can't see each other through the trees, which residents loved until they understood what it means for fire spread. Flames can jump from property to property through continuous fuel. Recent summers have brought multiple nearby fires, keeping the community on edge and insurers reviewing their exposure constantly. Every close call prompts another round of policy cancellations. The question isn't if fire will come, but when. Properties with wood-shake roofs or inadequate clearance around structures are being dropped first. But even well-maintained homes are feeling the squeeze as companies reduce their overall footprint in the area. Peson is becoming uninsurable block by block. Homeowners who invested thousands in mitigation efforts are still getting cancellation notices. They cleared brush, cut trees, installed metal roofing and ember-resistant vents. None of it mattered, because the surrounding forest remains. The Tonto National Forest can't be cleared or controlled by individual property owners. Federal land management decisions affect private insurance availability, but homeowners have zero influence over those policies. They're trapped between two bureaucracies. At number 12, we have Pine and Strawberry, adjacent mountain communities, that exemplify small-town Arizona charm. But their insurance situation is anything but quaint right now. Dense forest surrounds most properties, with homes accessible only by winding roads through heavy timber. The 2020 bushfire burned dangerously close, and insurers took detailed notes on how quickly flames moved through this terrain. Satellite footage of that fire gets reviewed every time someone in Pine or Strawberry applies for coverage. Residents report premium increases of 200 to 300% in just 2 years. Policies that cost $1,200 annually now run $3,600 or more. Several major carriers exited the market entirely, leaving fewer options and higher prices. The limited water infrastructure and volunteer fire department serve the community admirably, but don't meet standards insurers prefer for high-risk areas. Professional firefighters and hydrants every 500 feet are what underwriters want to see. Properties relying on wells and water tanks for fire suppression fail risk assessments automatically. Insurance companies calculate gallons per minute and response times down to the second. Rural water systems don't provide the flow rates they demand. Some Pine and Strawberry residents are considering selling before property values drop further. Others are going uninsured and hoping for the best. Neither option feels safe, but the insurance market left them no choice. At number 11 is Xolo, located in the White Mountains where people escape desert heat without escaping fire risk. The town experienced near-miss evacuations during recent fire seasons that insurers documented in excruciating detail. Insurance companies are responding by tightening underwriting standards across the board. Many properties easily insurable 5 years ago now face outright rejection or sky-high premiums. The market shifted faster than most homeowners could react. The extensive forest cover combined with increasing drought conditions pushed this area into a higher risk category, seemingly overnight. Xolo went from standard market to specialty high-risk insurer territory in less than 24 months. Homeowners are discovering that even modern construction and fire-resistant materials can't overcome location-based risk calculations. Brand new homes with every mitigation feature still get rejected. Geography is destiny in insurance underwriting. The White Mountains are becoming uninsurable regardless of individual property characteristics. When companies decide an entire region is too exposed, nothing homeowners do individually makes a difference. The forest surrounds everyone equally. Real estate transactions in Xolo now include insurance contingency clauses more often than not. Buyers make offers subject to finding coverage at reasonable rates. Many deals fall apart when insurance quotes come back. At number 10, we have Pinetop Lakeside, facing a double threat of dense forests and a growing population that expanded the wildland-urban interface significantly. More homes in the woods means more risk exposure for insurers. Insurance carriers are scrutinizing properties here with unprecedented detail, using satellite imagery and advanced risk modeling to identify vulnerabilities. They can see your roof condition, nearby trees, and fuel loads from space. Homes surrounded by heavy timber or lacking proper defensible space are being systematically dropped. Companies are working through entire neighborhoods, canceling policies in batches based on aerial surveys. Personal inspections don't even happen anymore. The region's popularity as a second home destination actually works against residents. Insurers view vacation properties as higher risk due to less frequent occupancy and maintenance. Nobody's there to notice a spark before it becomes a fire. Year-round residents are caught in the crossfire of market contraction aimed at vacation homes. Their primary residences get canceled because they share zip codes with seasonal properties. Everyone in Pinetop Lakeside pays the price. Local officials have tried negotiating with insurance companies to no avail. When underwriters make regional risk decisions, individual towns have no leverage. The math is what it is, and feelings don't change actuarial tables. At number 9 is Flagstaff, Arizona's largest mountain city that isn't immune to the insurance crisis despite its more urban character. The northern neighborhoods, particularly those backing up to the Coconino National Forest, are seeing significant policy cancellations. The 2010 Schultz fire and subsequent flooding demonstrated how quickly disaster can strike this area. Insurers haven't forgotten that fire was followed by debris flows that destroyed homes the flames missed. Double jeopardy in underwriting terms. Properties in the east and northeast sections face the highest scrutiny, where ponderosa pine forests meet residential areas. Even homes within city limits are being reassessed as companies recalculate their wildfire exposure across northern Arizona. Flagstaff residents assumed city infrastructure would protect them from rural insurance problems. They were wrong. Municipal fire departments and water systems matter less than vegetation and topography in current risk models. The university town atmosphere and growing tech sector brought new residents who are shocked to find insurance issues in what looks like a normal city. Flagstaff's downtown might feel urban, but its forest interface is undeniable. Some neighborhoods that never worried about wildfire are now getting educated fast. Insurance cancellations are spreading beyond obvious forest edge properties. The risk zone keeps expanding as companies get more conservative. At number 8 is Williams, the gateway to the Grand Canyon, finding that its forest setting is becoming an insurance liability. The town sits in dense ponderosa pine country, with many properties having direct forest contact. The volunteer fire department and rural water systems are adequate for the community's size, but don't provide the level of protection insurers demand in high-risk areas. Companies want professional departments with multiple stations and guaranteed response times. Residents are experiencing non-renewals even after decades of no claims. Companies make blanket decisions about entire zip codes rather than individual properties. Your perfect claims history means nothing when your zip code gets blacklisted. The tourism-dependent economy adds another layer of complexity, with many commercial properties also struggling to find coverage. Hotels, restaurants, and shops along Route 66 are getting canceled alongside homes. Business interruption insurance is almost impossible to find. Williams business owners worry that insurance unavailability will force closures that Wildfire never would. You can't operate a hotel or restaurant without liability coverage. The insurance crisis threatens livelihoods before any actual fire does. Local government is exploring creating a municipal insurance pool, but the numbers don't work. Small towns can't self-insure against catastrophic wildfire risk. They lack the financial reserves that big insurance companies spread across millions of policies. At number 7 is Forest Lakes, a small unincorporated community in the Sitgreaves National Forest that lives up to its name. The area is surrounded entirely by pine and mixed conifer forests with nowhere to run. The remote location and limited access have made it particularly vulnerable to insurance market contraction. Many properties rely on well water, with no nearby fire hydrants anywhere. Factors like these significantly increase risk assessments beyond what most insurers will accept. Forest Lakes has seen virtually every major carrier exit the market completely. Residents depend on specialty high-risk insurers charging premiums that can exceed $10,000 annually for modest homes. That's more than many people's property taxes. The community's evacuation challenges during fire events have been well documented, making insurers extremely reluctant to take on exposure here. Fire officials admit that if flames block the main road, residents have no backup escape route. Some Forest Lakes homeowners are paying more for insurance than their mortgage payment. Others have given up on coverage entirely and accepted the risk. A few are selling at losses rather than face another insurance renewal. The few insurers still operating here require proof of mitigation efforts that cost thousands to implement. Then they still charge sky-high premiums anyway. Residents spend money on clearance and roofing upgrades that barely move the rate needle. At number 6, we have Muns Park, situated between Flagstaff and Sedona, combining the worst insurance risk factors in one location: heavy forest cover, limited access roads, seasonal population fluctuations, and proximity to multiple recent fire events. The community sits in a bowl surrounded by dense timber, creating conditions where fire could quickly trap residents. Insurance companies use increasingly sophisticated modeling that accounts for topography, wind patterns, and fuel loads. Muns Park consistently scores poorly on every risk metric insurers analyze. The computer models show fire behavior scenarios that terrify underwriters. Trapped populations with limited water and distant fire departments make this area nearly uninsurable. Homeowners report that even with extensive mitigation efforts like clearing vegetation and installing fire-resistant roofing, they're still being dropped. Companies are reducing their overall Arizona mountain exposure, and Muns Park is ground zero for cancellations. Properties that had 3 or 4 carrier options 2 years ago now have 0 standard market choices. The Fair Plan is the only option, and even they're getting selective. Some applications to the last resort insurer are being rejected. Real estate agents are starting to disclose insurance availability before showing homes. Buyers need to understand upfront that coverage might cost $8,000 or $10,000 annually. Some properties are essentially unsellable without cash buyers willing to go uninsured. At number 5 is Alpine, deep in the White Mountains, near the New Mexico border, where remote beauty has become an insurance curse. The town is surrounded by the Apache Sitgreaves National Forest, with extremely limited fire suppression resources relative to the fuel load. The 2011 Wildfire, Arizona's largest on record, burned dangerously close and demonstrated the area's vulnerability to massive conflagrations. That fire consumed over 500,000 acres, and insurers studied every hour of its progression. Insurance companies have largely abandoned Alpine, with most residents forced into the state's Fair Plan or going uninsured altogether. Standard market carriers won't even quote policies here anymore. Agents don't bother submitting applications they know will be rejected. The multi-hour drive to major urban centers means fire resources must come from great distances. Insurance underwriters calculate response times and available equipment. Alpine fails every test by wide margins. Properties here that once secured standard policies are now considered virtually uninsurable by conventional markets. The shift happened rapidly as companies reassessed their entire Arizona forest exposure. Alpine got dropped first and hardest. Some longtime Alpine residents have lived in their homes for 30 or 40 years without insurance now. They paid off mortgages so no lender forces coverage. They're gambling their life savings on not having a fire. At number 4 is Greer, a picturesque mountain village known for fishing and winter recreation, facing an insurance crisis that threatens its character. The heavily forested setting and Little Colorado River create a microclimate supporting dense vegetation. beautiful in summer, but dangerous in fire season. That thick vegetation becomes fuel when drought sets in. The town's narrow valley location means fire could block both escape routes simultaneously. Emergency planners and insurers both have nightmares about this scenario. Second homes and vacation rentals dominate the real estate market here, and insurance companies have begun excluding entire categories of properties. Seasonal occupancy raises red flags in underwriting departments across the industry. Even year-round residents with meticulously maintained homes are finding themselves uninsurable at any reasonable price. Companies don't distinguish between primary and vacation homes anymore. Greer's zip code is the problem, not individual property characteristics. The few carriers still operating in Greer charge premiums that make ownership economically questionable. When insurance costs $12,000 or $15,000 annually for a cabin worth $300,000, the math stops working. People are walking away from family properties. Local businesses, dependent on vacation rentals, worry that insurance costs will kill their revenue model. Rental property insurance is even harder to find than primary residence coverage. The tourism economy faces collapse before any fire burns. At number 3, we have Heber Overgard, twin communities in the Mogollon Rim country, representing ground zero for Arizona's insurance crisis. The area has experienced multiple close calls with major fires in recent years. The Contreras fire in 2021 came dangerously close to structures, forcing evacuations and giving insurers all the evidence they needed. Companies are making wholesale decisions to exit the region entirely based on that event. Several major carriers announced they won't write new policies in the entire 85933 and 85939 zip codes. Not certain neighborhoods or high-risk properties, but entire zip codes blanket banned. Existing policyholders are being non-renewed as contracts expire. The community's dependence on well water, propane, and septic systems is typical for rural Arizona, but adds to insurers' concerns. Every factor compounds the others in risk modeling. Wells, propane tanks, and forest fuel create scenarios underwriters refuse to cover. Residents describe a market collapse where properties that had 3 or 4 carrier options 2 years ago now have none. Standard market, excess and surplus, specialty insurers all vanished. The fair plan is the only game in town. Home values in Heber Overgard are starting to decline as the insurance crisis becomes public knowledge. Buyers won't pay full price for properties they can't insure properly. Sellers are discovering their equity is evaporating. At number 2 is Happy Jack, where despite its cheerful name, there's little happiness in the insurance situation. The community sits in extremely dense mixed conifer forest between Flagstaff and Peson, with homes scattered throughout heavy timber. The area's popularity with Phoenix residents seeking cooler summer temperatures led to significant development, almost entirely without nearby fire hydrants or professional fire departments. Every home is isolated in the woods, relying on volunteer responders. Insurance companies view Happy Jack as representing almost pure wildfire risk, with minimal mitigation potential. The forest can't be removed without destroying what makes the area desirable. Homeowners are trapped between maintaining property value and reducing insurance risk. The winding forest roads that provide charm and privacy become death traps in evacuation scenarios. Fire officials acknowledge that certain weather conditions could make evacuation impossible. Insurers read those same reports and cancel policies. Virtually no standard market carriers will write policies here anymore. Even surplus lines insurers are becoming selective about Happy Jack exposure. The market is contracting towards zero coverage availability at any price. Property owners who invested life savings into Happy Jack retreats are watching their dreams become nightmares. They can't sell without taking huge losses, and they can't afford insurance to keep living there. They're financially trapped. But number 1 is where everything changes. Christopher Creek in the Tonto National Forest has become the poster child for Arizona's wildfire insurance crisis. This community along the Mogollon Rim is almost entirely surrounded by national forest. Homes are tucked into heavy timber, along creek drainages and hillsides. The combination of extreme fuel loads, difficult access, limited water supplies, and demonstrated fire behavior in recent years made this area essentially uninsurable through conventional means. The Backbone Fire in 2021 forced evacuations and came within feet of structures, causing remaining insurers to flee immediately. Companies that stuck around through previous close calls finally gave up. Christopher Creek was the last straw. Residents report that even the state's FAIR plan is becoming difficult to access, with applications facing intense scrutiny. The insurer of last resort is acting like a standard carrier, rejecting high-risk properties. When the backup plan fails, homeowners have nowhere left to turn. Property values have begun declining as buyers realize insurance costs, if coverage can be found at all, may exceed mortgage payments. Homes that sold for $400,000 2 years ago are listing at $325,000 with no offers. The market is collapsing. Christopher Creek represents the future many Arizona mountain communities fear. Beautiful, beloved, but too risky to insure. The place where the insurance market gives up completely, and homeowners face impossible choices about their future. This isn't just about 15 towns. It's about what happens when climate change makes entire regions uninsurable. Arizona's mountains are the canary in the coal mine for communities across the western United States. California, Colorado, New Mexico, and Montana are watching closely. Their mountain towns face the same equation of dense forests, limited water, climate-driven drought, and insurance companies recalculating risk. Arizona is just a few years ahead of the curve. The FAIR plan was designed as a temporary safety net, not a permanent solution for hundreds of thousands of homeowners. As more people flood into these programs, premiums rise and coverage shrinks. Last resort insurance stops being insurance at all. State legislators are debating interventions, but solutions are expensive and politically complicated. Forcing companies to write unprofitable policies drives them out of the state entirely. Subsidizing high-risk properties costs taxpayers billions. There are no easy answers. Some experts suggest managed retreat, paying people to leave the highest-risk areas before catastrophe strikes. But telling Americans they can't live in the forests proves politically impossible. Property rights and Western independence culture clash with actuarial reality. Meanwhile, homeowners in these 15 towns and dozens more like them are making desperate choices. Some are going uninsured and hoping. Others are selling at losses and leaving communities they love. A few are organizing to fight back legally. The insurance crisis is forcing a reckoning about where Americans can afford to live in a changing climate. Mountains, coasts, floodplains, hurricane zones. Risk is concentrating, and markets are responding faster than government can adapt. For Arizona's mountain towns, the question isn't whether wildfire will come, but whether insurance markets will exist when it does. The crisis isn't the fire itself, but the financial catastrophe of being uninsured when flames arrive. These 15 towns represent thousands of families watching their equity evaporate and their dreams become unaffordable. The American promise of homeownership is colliding with the mathematics of environmental risk. Insurance companies are doing what they always do, following the numbers. Arizona's most beautiful places are becoming its most uninsurable. The wildfire insurance crisis isn't coming in 2025. It's already here. Already changing who gets to call these mountains home.